Hey everyone, and welcome to our deep dive today. We're going to be tackling a pretty unusual topic. It all starts with this new ETF filed by Strive Asset Management.
Okay.
And get this, it's designed to track something called Bitcoin bonds.
Bitcoin bonds, huh?
Yeah, so I mean, right off the bat, that piqued my interest. Like,
Yeah,
what even is a Bitcoin bond?
right.
And then to make things even more interesting, this whole ETF concept, it kind of ties into what companies like MicroStrategy are already doing.
Oh, really? How so?
Well, they've been using convertible bonds to buy up tons of Bitcoin.
Interesting.
And I almost forgot Strive's co-founder, Vivek Ramaswamy.
Yeah.
Well, he's now working with Elon Musk in the new Trump administration.
Wow, so there's a lot to unpack here.
Yeah, there really is. It's like a financial puzzle with a political twist.
I'm intrigued. Let's dive in.
Okay, so first things first, Bitcoin bonds.
Right. Well, let's clear the air right away. There's no actual Bitcoin bond out there.
So what is this ETF actually tracking then?
It's going to be tracking these convertible securities issued by companies that are really heavily invested in Bitcoin,
Okay.
primarily focusing on MicroStrategy.
So it's more like investing in the companies that are betting on Bitcoin.
Exactly. It's a way to gain exposure to Bitcoin's price movements without directly holding the cryptocurrency.
Okay, I'm starting to see the connection now, but maybe we should take a closer look at MicroStrategy and how they're approaching this whole thing.
Absolutely. They've been issuing these zero-interest convertible bonds to raise capital and then using that money to buy massive amounts of Bitcoin.
Zero interest. That's pretty unusual. Why would they do that?
Well, for MicroStrategy, it's a way to get cheaper capital in the short term.
Okay.
And for investors, it becomes a pure bet on Bitcoin's price going up.
So if Bitcoin's price goes down, they take a bigger hit.
Right. There's no interest payments to cushion the blow.
Okay, that makes sense. Now, you mentioned convertible bonds before.
Yes.
Can you remind me again how those work?
Sure. So convertible bonds, they start off as debt, meaning the company owes the bondholder a certain amount of money.
Mm-hmm.
But here's the key. They come with this option to convert that debt into company shares
Oh, right. I remember now.
at a predetermined price and time.
So it's like having your cake and eating it too.
Yeah.
You can hold the bond and get your money back, or if Bitcoin does really well, you can convert to shares and potentially make even more.
Yeah, you got it.
But it seems like MicroStrategy is taking on a lot of debt
Yeah.
to bet on Bitcoin, which is, incredibly volatile.
It's a risky move for sure.
What are the downsides for them?
Well, the big concern is that bondholders might not choose to convert to shares
Okay.
before the bond actually matures.
And if that happens,
Then MicroStrategy is stuck with a ton of debt.
so they're walking a tightrope here.
They are. If Bitcoin skyrockets, everyone wins. But if it crashes,
They're in trouble.
they could be left holding a very expensive bag.
Okay, so that's the company side of things. But what about this ETF from Strive? What's the analyst take on that?
Well, James Van Straten, he's an analyst who's been following this closely.
Okay.
And he made a really interesting point. He said the fact that this ETF even exists, especially with Ramaswamy, now in the government,
Mm,
it
yeah.
hints at maybe a larger vested interest in Bitcoin succeeding.
You mean like a political motivation behind this financial strategy?
Possibly. It's like they're trying to create this situation where Bitcoin has to succeed.
That's pretty wild. And speaking of Ramaswamy, he was super vocal about crypto during his presidential campaign.
Well, he was. He was all about reducing the SEC's power and getting clearer crypto regulations.
So now that he's actually in a position of power, what do you think that means for the whole crypto world?
Well, that's the million-dollar question, isn't it?
It really is. It's like we're at this crossroads where traditional finance and the crypto world are starting to collide,
Yeah,
and his involvement could really tip the scales one way or the other.
no doubt about it. It's a
Mhm.
situation with huge potential implications. We're
Ah.
just starting to scratch the surface here.
Okay, so we've got this unique ETF basically mirroring MicroStrategy's bet on Bitcoin. We've got Ramaswamy, a known crypto advocate now in the government, and we've got analysts suggesting there might be a bigger game at play here, maybe even involving the government's stance on Bitcoin under the new administration.
It's a lot to consider.
It is. It's a lot to consider. So before we go any further, let's take a closer look at MicroStrategy's strategy.
Good idea.
What are the specific pros and cons for them, and what does it mean for those who buy these bonds? We'll dig into all that when we come back for part 2 of our deep dive.
Sounds good. All right, so we're back and ready to really dig into this MicroStrategy strategy.
Yeah, let's break it down, because on the surface, it seems pretty clever, issue these bonds to buy Bitcoin
Right.
and hope the price goes up.
Yeah, But like we were saying before, it's definitely not without its risks.
No, definitely not. So let's start with the potential upside for MicroStrategy if everything goes according to plan.
Okay, so the big advantage for them is they can get a hold of a bunch of Bitcoin
Yeah.
without having to dilute their shares right away.
Right, because they're using debt, not equity, to fund the purchase.
Exactly.
Mm-hmm.
And if Bitcoin does what they're hoping and goes way up,
Mm-hmm.
and those bondholders decide to convert to equity,
Mm-hmm.
MicroStrategy basically got all that Bitcoin
Yeah.
at a bargain price.
So their equity value shoots up potentially by a lot.
Yeah, exactly. They're basically trying to use debt to supercharge their equity growth.
All fueled by Bitcoin.
Exactly. But, and this is a big but,
There's always a but.
for this whole thing to work, Bitcoin has to go up.
Yeah, like significantly, right?
Yeah, it's got to rise enough that those bondholders are like, okay, I'm going to convert my debt to those sweet, sweet shares.
So MicroStrategy's success hinges on what the bondholders do.
To a large extent, yeah.
What happens if they just decide to hold on to their bonds and not convert?
That's the nightmare scenario for MicroStrategy.
Yeah, because then they're just stuck with all that debt.
Exactly. And remember, these are zero interest bonds.
Right.
So there's no income coming in to help pay it off.
So it's all riding on Bitcoin.
Pretty much, yeah.
Okay, so that's the company's perspective. But what about the bondholders? What are they getting out of this deal?
Well, for them, it's kind of like a leverage bet on Bitcoin.
Okay.
They have a chance to profit from Bitcoin's rise without actually owning it directly.
Okay, I see.
And if the price goes up enough and they decide to convert to equity, boom, they could end up with company shares at a much lower price than the market value.
Leading to some pretty big gains.
Yeah, potentially huge gains.
Yeah.
But
There's got to be a but.
there is. What if Bitcoin doesn't perform well?
Do they lose everything?
Not necessarily.
Mm.
Even if they don't convert to equity, they're still entitled to that principal repayment when the bond matures.
So they at least get their initial investment back.
Right. But obviously, if Bitcoin tanks, their return is going to be pretty measly compared to what they could have made if they had converted.
Yeah, I get it. So it's a calculated risk for sure. High potential reward, but also a decent amount of risk.
Exactly. And that's what makes this Strive Bitcoin Bond ETF so interesting.
Okay, bring us back to the ETF.
Sure. So basically, it packages this whole strategy into something that's much easier for the average investor to get involved with.
So instead of having to go out and buy individual bonds,
Right.
you can just buy shares of this ETF.
Exactly. And it tracks a bunch of these Bitcoin-linked convertible securities, including the ones issued by MicroStrategy.
So for someone who's like, hey, I think Bitcoin's going to go up, but I don't want to buy it directly, this ETF could be a way to dip their toes in the water.
It is. It lets them participate in the potential upside of MicroStrategy's strategy, but with the added benefit of diversification that comes with an ETF.
Right. Diversification doesn't eliminate risk, but it does help spread it out a bit.
Exactly. But it's still super important for investors to really understand what they're getting into.
Yeah, they got to do their homework.
For sure. They need to understand how this whole strategy works and all the things that could affect the outcome.
And let's not forget about the Ramaswamy factor.
Right.
His position in the government, his views on crypto, it could all have a huge impact on the whole landscape.
Oh, absolutely. It adds this whole other layer of uncertainty and potential.
Yeah, like, could his influence lead to a more crypto-friendly regulatory environment? And could that, in turn, boost the success of this entire strategy?
It's definitely a possibility. It's like a chain reaction.
Yeah.
One thing influences the next.
Right. The success of MicroStrategy's gamble, this new ETF, the future of Bitcoin itself, it's all connected.
Yeah, it really is. And it all kind of hinges on the actions and decisions of those in power.
Okay, so we've explored the upside. But now I think it's time to flip the coin and take a hard look at the potential downsides.
Yeah, we got to examine both sides.
What could go wrong?
Right. What are the critics saying?
Yeah.
What are the risks that investors need to be aware of? We'll dive into all of that when we come back for the final part of our deep dive.
Okay, so we're back for the final part of our deep dive, and it's time to face the music. What could go wrong with all of this?
Right. We've talked about the potential rewards, but as with any investment, there are always risks, especially when you're dealing with something as volatile as Bitcoin.
Yeah, that's the big question, isn't it? What are the biggest risks that investors need to be aware of?
Well, I think the most obvious one, and probably the most significant, is Bitcoin's volatility.
I mean, it's no secret that Bitcoin's price can swing wildly in both directions.
Exactly, and that's what makes it so exciting for some investors.
Yeah, the potential for huge gains.
Right, but it also makes it incredibly risky.
Because if Bitcoin's price crashes, this whole strategy could fall apart.
That's right. If the price drops too low, those bondholders might not want to convert their bonds to MicroStrategy shares.
And then MicroStrategy is stuck with all that debt.
Exactly. And the value of that Strive ETF, which is based on those bonds, would probably plummet too.
It's like Bitcoin's volatility is both the biggest opportunity and the biggest threat.
Exactly. It's a double-edged sword. And remember, MicroStrategy issued zero-interest bonds.
Right. So there's no income coming in from those bonds to help soften the blow if Bitcoin takes a nosedive.
Nope. It all hinges on Bitcoin's price going up.
So yeah, high risk, high reward.
Absolutely. I imagine there are a lot of people out there who are pretty skeptical about all of this.
Oh, I'm sure. They're always critics. What are they saying?
A lot of financial analysts are worried about MicroStrategy taking on so much debt to invest in such a risky asset.
Like they're betting the company's future on Bitcoin.
Yeah, pretty much.
Yeah.
And while it could pay off big time if Bitcoin keeps going up, the consequences of a major downturn could be devastating.
So for our listeners out there who are thinking about maybe investing in this Strive Bitcoin Bond ETF, what's the takeaway? What should they be thinking about?
Well, the first thing is they really need to understand Bitcoin.
Yeah, like really understand it.
It's not enough to just be like, oh yeah, Bitcoin's the future.
Right.
They need to understand how the crypto market works, how volatile it is, what factors can influence its price.
And of course, they need to do their research on MicroStrategy too.
Absolutely. Look at their financials, understand their debt load, see if they can handle things if Bitcoin's price takes a hit.
It sounds like due diligence is essential here.
Oh, absolutely.
Yeah.
This isn't just about jumping on the Bitcoin bandwagon.
Right.
It's about making a smart, informed decision based on a solid understanding of everything that's involved.
The risks, the potential rewards, the whole shebang.
Exactly. So we've covered a lot of ground in this deep dive.
We really have. This whole Bitcoin bond situation, MicroStrategy's strategy, the Strive ETF Ramaswamy's involvement, it's a lot to wrap your head around.
It is. We're basically seeing the world of traditional finance and the world of cryptocurrency colliding.
Yeah, and this ETF is right at the center of that collision.
It's like a financial experiment playing out in real time.
With no guarantees?
Nope. The future of Bitcoin, the success of MicroStrategy's gamble, the impact of government regulations.
It's all intertwined.
And the outcome is anyone's guess. So as always, we encourage you to do your own research.
Absolutely. Dive deeper into what we've talked about today and then make your own informed decisions.
Decisions that align with your financial goals and your risk tolerance.
Because this is a wild world out there.
It is full of potential, both good and bad. Staying informed and understanding how all these pieces fit together is more important than ever.
Well said. And on that note, we'll wrap up this deep dive. Hopefully you found it informative and thought-provoking. Join us next time as we explore another fascinating corner of the financial world. Until then, happy diving.